All right, we're talking about IEA. That's the ticker symbol, and it's kind of their logo. It actually stands for Infrastructure and Energy Alternatives. We did a piece on it on October 13th. It was actually kind of a bonus piece. We were doing Solar Edge, and we thought this smaller one fit nicely with that. And we didn't do a separate one. I wish I had, because the stock is up 50% since that time, and that's only a month and a half now. It's October 16th, or I should say, almost exactly a month, I should say. 50%, and it's actually up about 71% just in November. Okay, but before we do, I got to give a shout out to Dustin Johnson for winning the Masters this year that was held in November, which is unusual, but that's because of the COVID, and unbelievable performance. The guy was 20 under, which was a record. It must be nice to be Dustin Johnson. He's married to an absolutely beautiful woman, one of the most beautiful women I've ever seen. It happens to be Wayne Gretzky's daughter as well, so his father-in-law is Wayne freaking Gretzky. That's pretty awesome. He's number one in the world. He just set the record at the Masters. He's the Masters champion. I would say, all in all, it's pretty good to be Dustin Johnson right now. All right, back to the matter at hand, though. IEA, Infrastructure and Energy Alternatives. As I said, we did a piece on it October 13th. It's up 50% since that time. It is not time to sell. That's the bottom line. You can go to the next video right now, but let's just give you a little color on it. A few things have happened. First of all, they signed a new deal, $550 million. That goes from now to 2024 for an infrastructure project on a railroad. Okay, that's a nice win. It's not, by the way, it's not a game changer. They do about $550 million in revenue per quarter, so that's like a quarter's worth of revenue spread over for 2020, almost 2021. So what, 4 years? Let's just call that 4 years. So it's a nice contract, but people really did seem to like it, and the stock did move up when that was announced. They also announced their third quarter, which was really good. I want to let's look at that quarter a little bit more. So let's jump over to our model. Here we go. And these are the actual financial statements of it. And it was record revenue. Revenue was up 23% compared to the same quarter the previous year. Was record revenue, almost record EBITDA. That was set in actually 2019, December 2019. But still, things are good. And plus, this was a tough time with COVID, everything else. So record revenue and almost record EBITDA during a tough time. Still grew 23%. Let's just take a quick look at the actual, the summary model. And, it's early for this company in terms of being public. It's an engineering firm, so we expected high rates of return, which they're showing, unbelievable rates of return. Off the chart, 30%. I've done I think a very conservative forecast. In terms of return, I've taken their returns down. I put in lower growth. I checked out the EBITDA line that this rate of return implies, and it's just a very low forecast. It's really not aggressive. It's just not aggressive. That's a better way to say it. And we're getting a $34 price. Now that sounds a bit crazy. 3 times what it's trading at, and it's already run up. But it's not that bad. It's really not that bad. It's only trading at 5 times, even after this run. 5 times EV/EBITDA. Let's get which ratio we're talking about. It really matters, and which multiple. EV/EBITDA. So I think that's the best one in my opinion. If you're just going to use multiples, I think we should do a full model the way we do. But if you want to shorthand it, EV/EBITDA is the best way to go in my opinion. It's only trading at 5 times after this run up, and that's trailing. Earnings and cash flow and EBITDA should be going higher going forward. So once in a while you find these gems that can just keep going. It's in renewable energy, which is exciting. By the way, we did not pick this because Biden was going to get in, or we didn't do any of that political stuff. We just buy good companies, and we didn't really care who won the election in terms of for this stock. Although I'm kind of glad Joe won, but that has nothing to do with the stock. I would have liked it regardless. So a lot of good things, and this is kind of just a reminder one because we'd already done one. Not much has changed other than they signed another contract, which was good. And they had a good Q3. Oh, by the way, yeah, I can hardly keep up with this company. There was another press release today that was, I'm going to say, fairly significant, but not a game changer in my opinion, although the stock is up 8% today. I can't necessarily attribute it to this, but they offering a new service of maintenance contracts. It's the formation of a new renewable energy service. Basically, they're going to do maintenance on their wind and solar projects, which I guess they haven't been doing before. They would build it and help build it and be part of the engineering team. Leave it with the company that built it, and say goodbye, good luck. Call us if something goes wrong. But excuse me, this is an actual maintenance contract. It's good. It's nice news. I love renewable energy or recurring revenue. Happens to be in renewable energy, so but all is good there. I don't think that's necessarily a game changer. It's a nice add-on. It is renewable or recurring. What is wrong with me? Okay, so let's move on from that. IEA is the ticker, and that is trading on the NASDAQ. Okay.